Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, the 27th of April, 2023. And the time, I think we're right now just after, we are. We're getting on to 6:35 p.m. Central Time. Okay, I want to get this out for you as the draft is going to begin. We'll all be looking to see who's going in the first spot. We don't know what many of the teams are going to do, but it's always fun to watch if you're into that. But today was watching an interesting day. If you watched, Meta last night had blowout numbers. Just carried the market. You know, you've seen already that Microsoft's done real well. There are companies not doing well. Snap didn't do well. Amazon's numbers were nothing to write home about. They didn't look good to me. But more companies than not are beating earnings. That's what I'm seeing so far. The bank contagion out of the First Republic has not spread. That's a positive. We then saw GDP, and again, the naysayers, that's what I like to call them, the people that just buy on every one of the breaks because they are convinced, from day one they've been convinced the Fed will never go all the way with the raising of interest rates to get the market under control and inflation. They don't believe it. They think that the Fed will blink because things will get weak, okay? But how do they get weak if everybody's employed? When I say everybody, you got the lowest employment in history. Did you see unemployment claims, initial and continuing, both fell today? But GDP did fall. It's only 1.1%. The market was hoping for 2%. There were whisper numbers that would be even higher than that. Well, what's really going on is industry has decided to go out and instead of make more products, let's cut into the inventory, not spend money. That goes hand in hand in many of the areas where we're seeing jobs being cut. So be it manufacturing, different areas there, we're seeing it. We're seeing, of course, that the jobs in the hotel industry and the restaurant industry, if you want to work, you can get a job tomorrow. There are people dying to take you on, and that shows up each and every report that we're seeing. That too will die as the summer fades. We're not in summer yet, we're in spring. But as you get into the summer, you start saying, okay, I don't need to hire anybody more. I've got all my staff. Who am I going to let go when the weather changes? Blah, blah, blah. You're not there. I'm walking you from A to Z instantly, but it's important to understand it. So what went on is the market is saying, well, it would have been an even better market, but had it not been that they're going to draw on inventories. Okay, but when they replace those inventories, whatever company it is, the cost of goods is more and the cost of labor is more, especially if you have something that's been in inventory for a year or so, okay? Just the goods price and so on, that's how inflation has been working. So they're not doing that. They're going to draw down on it until they can't draw down on it anymore, and that's where the problem can set in. So it's almost setting up an interesting second quarter already because there's not going to be that spending going on. It's the inventory draw number. How did the market like it? It roared. It started off with the tech doing good, and like I told you, you could throw a super bearish market at this and the naysayer will find a way to say, yeah, but that's now, and you know, that's going to make the Fed not do this. That's all that we keep hearing. If you buy that story, great. I do not have cement around my feet. I can change tomorrow 180 degrees. Give me the reason to do it, and I will do it. Show me that the jobs in America are falling apart and the trajectory's going like that, and I'm in that camp. Why? Because the consumer is so strong. They're buying cars. They're buying everything you can imagine, and that is what's making things go. So when I take a look at the S&P, I get where we're at, but I've also told you, you've been up here, you haven't gone anywhere for a long time, and you're actually, even with this monster rally, down 0.17 for the week on a closing basis. When you see the rally that came back, you went back into the resistance zone. Now, let me think about this. Do you think there was any short covering in front of next Wednesday's FOMC meeting? Who am I to know, but I'm guessing there probably is. You have a higher high, lower low pattern. I don't call that a trend, and I've said that to you repeatedly here. You went down, did not hit the 100-day average, but you're back to fighting at that 18. But where did the market go to? Shucks. I can't believe that I forgot to mention this, right? I mentioned it. You follow me right here. When you get to a Bollinger Band, the first challenge of that number, 95% of the time the market's going to stay within it. That does not mean you can't bust through it from time to time. But look at this chart. So as you're coming down here, I'm looking at two numbers. I'm looking at the 4087 down to this number, and I'm saying to myself, I know it's not a downtrend because I've got a higher high and low pattern, but it's an area where you probably have reason for short covering. Market probes itself down. This is yesterday. This is today. Okay. Do I think you're going up very big? No. I think that number one, you got massive resistance at the 4,200 with the upper band. I can see what's here. Now, if Fed Chair Powell were to say one and done in some manner and the market believed that, okay, who knows where you go, but I'd still say 4,200 is the resistance. What about momentum? Well, let me again walk you back just a minute. First challenge of a Bollinger Band, look at how oversold you are, you hit it. You don't think that that's what I talk here every night? I do. You got to learn to work with them. Your bands won't be like mine. I've altered how mine look. My subscribers know what they are. And for those of you that use TradingView, we're going to have our suite of products, all these different parts in it. It's already there. We haven't made it available. It's built. It's behind the scenes there for those of you that use that. And of course, you know, they're all here in my own product. In the micro mini NASDAQ, you've gone from the lower band almost to the upper band. You got oversold. You hit the lower band. You got short covering. If you keep going, I think you're going to have the resistance here. And I know you're going to tell me, Ira, you don't know anything you're talking about. Are you paying attention to those tech stocks? And I do. But I pay attention to that band an awful lot too. And if you embed it, which means you get it up and you start going like that, I'll get bullish. Don't do that? No. Are you trending? No. Where I went to charting school, and they did have them, lower low, higher high. You've got to learn the basics. That's not it. This was a short covering event that I think took place. What about the Dow? Let's go back together. You tell me. What do you think I'd say? It could be a moment of silence. Market falls, black line, oversold, and you get your bounce. And I'm supposed to be surprised? I'm not even going to say it. All right. Now, as we were rallying here, the one thing I was saying is, you know, there's something not making sense. And I'll give you how strong the naysayers are. They're like the meme boys. Remember those meme stocks that were buying anything and they would just drive it? It doesn't matter if the Fed's going to raise rates. It's one and done. And they were buying and they got caught. You're back in that downtrend. Trend down, bias down, but you got support starting again at that 100-day average at 129.26. You've got your resistance, 131.15. To prove the market's going to have legs to the upside, I think it would have to get over 132.21. But before it gets there, I think the bears will defend the short position if the 18-day average would stops over that number. In the 5-year note, sort of the same game. But why go anywhere? Why would somebody take big bets right in front of the Fed meeting that's so well anticipated a 25-point hike? It's not the hike they're going to look at. They're going to look at the wording out of the Fed, and no matter what he says, the naysayers are going to put a spin on it that, he's ready to stop. I know you don't have to believe me, but that's how it's going to play out, okay? I've seen this game, seen how it works. It isn't what he's going to say, but that's how they'll twist it. In the dollar index, you went down to the Bollinger Band yesterday. What are you supposed to do? I think there was short covering. Is there a trend? Well, it's back and forth right here. I don't think it's really doing much. The eurocurrency, though, higher lows right into the upper band 3 days ago. And boom, sells off a little bit, but the trend is up. I think the pros want to be long the euro. Do I think it's wise to go into the FOMC meeting? I have a policy. I don't go into these things. This is the futures market. This isn't an investment market. Investments are Meta, Microsoft. I can go on and on. Those are investments, whether they do good or bad. Investment doesn't mean you're making money on it. This is a trading vehicle. 90% leverage almost for a reason. You're supposed to trade them. Got it? And why do I have to be involved in an FOMC meeting where I know what my mindset is, but it doesn't mean I'm right? It's easier to jump back on the train, and I'll wait for between the end of that meeting and then days before the June meeting, I'll do the same thing. I know it. In the British pound, I think the market's caught here. I think that they're forced also next week. They come in after us. I think, I don't know which day, but it's right around the corner there. And they're going to have to go up on their rate. They're fighting the same thing with the inflation and so on. Japanese yen tomorrow. We get the FOMC, not the FOMC, their monetary policy meeting. They don't have a Fed. They have a monetary policy meeting. And we will see what Mr. Yuta says. I wouldn't want to go through that. Never seen him say anything. Don't know too much about the gentleman. I want to learn something. I want to see what he does. In any case, lower highs, lower lows. This is the June now. I switched today to June. May, the last trading day, is tomorrow. You wait for the very last moment in Bitcoin because it's cash settlement. So unlike a futures contract, that in some you can get delivery if you stay too long. There's a first notice day and then there's the last trading day. Doesn't work that way in this, and it's now time to make your move. Now I've moved to July Brent versus July WTI. And you're into the 360 level. Why? Because the May crude oil goes bye-bye tomorrow. So you're down, you're into the Bollinger Band. Do you think I'd tell my clients to be shorted a Bollinger Band in an oversold market? Would I tell them to get long? Would I tell them, look for something else to do with both hands? WTI, same way. You fought this battle between the 100-day, the 200. You did that for almost a week, and it finally caved in yesterday. Bit of follow through today, that's all you can say. Gasoline, same thing. Do yourself a favor. Open up your weekly gasoline chart. See what the number is that the market's fighting at in moving averages. I'm not going to share it with you here. Take a look. And in nat gas, another big build today, but the market did well with it. It's absorbing it. Do you know why? We are now going into May. The first time we hear hot weather is coming into central United States. The market will do this. Zing. Why? Everybody will say, that's it. The beginning of the heat's beginning. Things are going to go crazy. Today, Spain, which has nothing to do with really the June natural gas, registered the hottest day ever. This is April 27th. I think it was 38 Celsius, something like that. The hottest ever at this point in time. Wow. That gives you an idea of what's going on. I'll be watching F1 racing this week. I wonder what the temperatures are going to be. Lower highs, lower lows, fighting right there. The trend is down. The pros are still selling this, in my opinion. They won't like if the market gets over 248.40. Barring that, they'll be looking for the 220.50 level. So you just keep your eye on it and you trade it or look at it accordingly. So I think it's an interesting time. We're covering this in details galore in all the reports we're putting out. If you're a futures trader, I don't care if you're trading the stock indices, the currencies, interest rates, the soft commodities, grains, meats, galore. There's so much to write about and so much that's going on. Grains have been in a crashing stage over the past 5 days. I mean, a monster one. It's kicking up the meat markets. You understand the relationship between them. We write about it time and time again. I have my first, whether it wins or loses, a feeder cattle position on. And it's interesting as can be. Why? Because it's a chart pattern. That's what I look at. I prefer to cover the name of the chart. Look at it as a pattern. What's the dollar risk on the trade? Hey, it's all set up. Is there good volume in that market? Okay, I can trade that. How do you look at it? When I say trade, make my recommendations to you, by the way, too. IraEpstein.com. Free offers. Click up here. You'll see an icon, free offers, and the old-fashioned way. You can always call my staff. They will either pick up the phone or get right back to you, and they will get you out exactly what you need, literally while you're on the phone with them. I'm Ira Epstein. You have yourself a great evening. Watch the draft. I'll catch you first thing in the morning. Take care.